and welcome again. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. You're joining our Market Insights and Observations. Today is Tuesday, March 19th, and we're going to go through three topics markets are paying attention to. We want you to be keyed in on, so let's get right to it, and thanks for watching. Our three topics today, we're going to talk about the U.S. monetary base, what that means, crude oil, check in on crude oil, as well as commodities. And let's go right to it. So this is what in the United States, in billions and trillions of dollars, sort of the monetary base of just showing liquidity and support by way of the U.S. Treasury and what's out there in the market itself. What you can see, especially going back to QE 1, 2, and 3, it's the Federal Reserve. What they tried to do in the Treasury is they added liquidity into the system, treasuries, buying treasuries, printing money, back in 2007, 2008 in the great financial crisis. And that was the first generation of the Federal Reserve basically going on credit even more so, taking out a HELOC when there's not much equity left in the house itself. But the Federal Reserve did it 1, 2, 3 times. And obviously COVID, we did it again. And now it's very suspicious that there is the monetary base being supportive. Why would that be? Because the Federal Reserve, by way of Jerome Powell, is trying to tighten financial conditions to slow down the velocity of money, to slow down inflation. That has been the whole goal over the last 20 months of raising interest rates. Now in 2024, everyone's talking about lowering interest rates. Now, if you recall, if you've tuned in at all in the last, let's say, 4 months, I've been on a lot of publications, I've been in a lot of media, and on a lot of TV sets from Fox Business to CNBC, all the way through, and quoted in the Wall Street Journal saying very specifically, I believe the Federal Reserve will have to be higher for longer. One of the reasons is this monetary base. So is it the U.S. Treasury outside what the Federal Reserve is doing behind the scenes to prop up ultimately the economy, because we're in an election cycle? I'm not being Mr. Conspiracy Theory. I'm showing you the proof of what's happening and why markets are higher. Keep in mind, the great Inflation Reduction Act basically backloaded 23 and 24, the calendar years, for construction and special projects. So all those dollars that were passed, billions and trillions of dollars, are now projects that in 2023 and 2024, majority of that spending this year is now taking place. That's very inflationary. So this is very interesting to see, this little rise in or increase in liquidity in the monetary base. That's why markets are doing well and economies roaring ahead. Now, another concern is crude oil. Crude oil now seems to be basing after a major consolidation, and so it's making higher highs off of lower lows and now consolidating higher. So it's going to continue on this path. So let's see if crude oil just continues on this path. That's going to be problematic for the Federal Reserve because, remember, you have an X-energy report in the CPI, but still energy is part of what you and I spend money on. It's called kitchen table economics, and they can't get past that, so that's a concern. Another one that we're taking a look at, we have prices of gold moving up. We also have another one as well. Commodities are moving up. And now the central bank are also hoarding gold. So gold prices are now going higher, and central bank is putting more in reserve and net purchases basically of what the Federal Reserve has been doing. This is also a commodities. So if you've seen what cocoa prices have been doing, but the basket of commodities in general, all of these, from commodities to crude oil, are rising. Even Bitcoin we're seeing as a sort of an outside the box asset class now is being defined as an asset class or an inflation hedge or a hedge against what monetary policy is ultimately doing. Every single one of these hedges, historically speaking, are all now moving in the same direction, and they're moving higher. This could be problematic for the Federal Reserve because we started the year 6 potential rate cuts. Now we're down to 2, maybe 3, maybe starting in June. But we'll know in the next 48 hours what the Federal Reserve, what their language is actually going to be. I believe, again, Federal Reserve Chairman is going to have to maintain optionality because he has to maintain higher for longer on rates, because the last thing they want to do is stop and then start again like they did back in the 1970s and early 80s. So that's our update for today. Those are our slides that we're going through. We're keeping an eye on inflation. Let's see what the Federal Reserve happens to say later this week and how they want to handle exactly what's happening out in the market right now. Thanks again for watching, and if you have any questions, comments, or you just want a quick review, give us a call at Blanke Schein Wealth Management. We're happy to help. Talk to you soon.